It is my pleasure to introduce Emily Mercy to everyone. She is the co-founder of Goparity, which is an organization I learned about actually from one of the women I was working with, and I'm so glad that I did. A question that we get at Untangle Money all the time is, how do I invest with my values? How do I do good while investing? How do I avoid investing in things I don't believe in? And there's some ways to do that, and there's some ways that are more challenging to do that. And I'm by no means an expert in that area, but I'm super excited to have Emily here to walk us through a high level of impact investing and how to get your money working for you in a way that feels good. So I'll take it away.
Thanks, Kristine. Yeah, I'll just share my screen. So, Kristine, let me know if you can see that and it looks good.
Looks great.
Okay, perfect. Yeah, I'm really excited to get started with everyone today. We can start with a little land acknowledgement. Just having some issues flipping through my slides. There we go.
Yeah, and so in the spirit of reconciliation, Untangle Money is operating in the Greater Toronto Area. We honor and acknowledge the traditional territory of many nations, and including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, the Haudenosaunee, and the Wendat people, and that it is now home to many diverse First Nations, Inuit, and Métis. And I know I went through that really quickly, but I really want to get to the next slide because I wanted to highlight an artist from the Anishinaabe, and he is Norval Moore, also known as Copper Thunderbird. He's an Indigenous artist who is an Anishinaabe, or from the Anishinaabe First Nation, and he was seen as the grandfather of contemporary Indigenous art in Canada. And he actually did this against laws at the time by the government that said they weren't allowed to practice their beliefs, and also against the wishes of the community that said they weren't allowed to make visual depictions or physical depictions of their oral history. But I really am glad that it seems like he was embraced, and because I think his images are really powerful. This one particularly is him envisioning his grandfather on the left, teaching him on the right about about these oral histories. And I feel like it's a nice tie-in because today Emily and I are sharing our experiences of the world with you, the audience. And I thought this was a beautiful way of showing how information is transmitted between people. And I think it's beautiful. Thank you.
Yeah, thanks so much for that, Kristine. I think that's such a lovely tradition, highlighting an Indigenous artist as part of the land acknowledgement. Yeah, I invite everyone to acknowledge the land in which you live, work, and play. Goparity is headquartered on the traditional territory of many nations, including the Mississaugas of the Credit, the Anishinaabe, the Chippewa, Haudenosaunee, and Wendat people. I am currently speaking to you from the beautiful Vancouver Island, which is home to many Coast Salish groups. So I acknowledge that I'm a guest on these lands, and in my particular area, I'm on the unceded traditional territory of the Snuneymuxw, the Snow-Nawas, and the Saanas people. And I've also prepared a highlight of a local Indigenous artist. So since I am on Vancouver Island, I thought I'd highlight a local artist, April White, or Killer Whale Woman. So April was born in a remote island on the west coast of Vancouver Island called Haida Gwaii. And she's a descendant of a long line of highly respected Haida master carvers, primarily stone carving. And April studied geology at the University of British Columbia in Vancouver. But today her primary art form is watercolor. So she actually designed the British Columbian salmon fishing stamp, which is a little fun fact. And she has this gorgeous artwork that you can see here. So getting to the presentation, this presentation is kind of in three parts. So the first being the impact of your money and specifically our capital as everyday Canadian investors. Then I'll get into some of the options for citizens, and then finally introduce what we're doing at Goparity and how we're doing things a little bit differently. And throughout the presentation, I've tried to incorporate storytelling about my own experience and learnings in this space. So feel free to use the chat as we go along here. You can ask your questions into the chat. I'll have Kristine just looking and monitoring that, but we'll also get to some more questions at the end. So the Canadian investor landscape has many different groups. Institutional investors are organizations or entities. Accredited investors, these are the highest income bracket, the top 1% of Canadians, and retail investors, who are also known as non-accredited investors, and that's most of us. In fact, it's 99% of Canadians. And that's the group I'm really going to focus on today. So all of these groups have access to different types of investments, but we'll be talking specifically about the retail group. And by definition, retail investors are non-professional individuals who buy and sell securities. And despite not being Wall Street experts, retail investors collectively hold really significant financial power. In fact, they have 75% of Canada's private wealth, which is almost $6 trillion. And we, retail investors, are becoming more socially and environmentally conscious, meaning we have a lot of power to do a lot of good. At the 2015 Paris Climate Agreement, the United Nations outlined 17 interlinked goals for sustainable development that promoted positive impact on people and the planet, as well as on our communities and the economy. And these goals have been really widely adopted by governments, organizations, and individuals around the world. You likely might have seen them before. But to achieve the UN's 2030 Agenda for Sustainable Development, it requires $5 trillion. Now, this is a US dollar figure, invested into initiatives that are supporting the SDGs. Now, we know with the amount of private wealth in Canada that retail investors hold, even with this Canadian to US conversion, Canadian retail investors pretty much have enough money to meet this global goal. And that's definitely not to say that it's all in the hands of Canadian retail investors, but just to kind of show the power that we do have and the power that is in our hands and a clear opportunity to do some good in the world. Yet every year we've fallen short of hitting this target. So although it sounds simple enough to invest the much needed capital into these global goals, it's actually really difficult for retail investors specifically to invest in these goals. And that's especially true for women. A 2017 StatCan study, a little bit out of date, so take it with a grain of salt, showed that only 23% of accredited investors are women. And although this number has been increasing drastically over the decades, it really shows where the power lies in the investment landscape. So only a fraction of Canadian women fall into this accredited category, meaning the majority of us are retail investors. And us retail investors participate in the investment space by using financial institutions to make investments. And here in Canada, our largest financial institutions don't seem to be very focused on these goals. So since the Paris Climate Agreement was signed, we have the big 5 Canadian banks pouring over $1 trillion into fossil fuel companies. So our savings sitting in our bank accounts are being used to finance climate chaos. Well, what can we do about it? So I want to talk about a little bit about when I started my personal finance journey. I was an undergrad student, basically looking to keep up with my peers and participate in the discussion happening around the world of finance and investing. But boy, when I tell you it was very overwhelming. It's no secret that investing is complicated, it's nuanced, and has so many little niches that you can get caught up with when starting out. And it's also no secret that investing can be a bit of a boys' club. And the fact is that men do invest more than women um, at the retail level, and as we just saw, especially at the professional level. And I could get into the many reasons of why this might be, but that's not what this presentation is about. That's a whole other presentation. The fact is that we need to encourage women to invest because when women invest, we create impact. And while women are not matching men in pay, they actually outperform men in long-term investing overall. And encouraging more women to invest can actually help close the gender wealth gap. And with the emergence of new investment vehicles and strategies, we're seeing a growing number of female leadership and involvement, which is super inspiring. And women are actually starting to come out as impact and ESG investment leaders. So Goldman Sachs revealed that in 2020, the European funds managed by female or mixed gender teams were outperforming those exclusively led by men. Um, and female investors overall place more importance on a company's social and environmental considerations than male investors. So this is pretty big because it's an opportunity for female investors to start leading in a very specific sector that is growing quickly and becoming more and more important as we start seeing the impacts of climate change become very real. But it's not a huge surprise that when I was in that period of my life, looking to get started in my investing journey, mostly out of peer pressure, what really interested me were those investments contributing to issues that I cared about. So it started for me with just a clean ETF from my bank. And I thought, well, I'm an environmentalist, so I know I don't want to invest in fossil fuels. A clean fund sounds good. And most people stop there. They feel good about investing in something with a nice label, and that's the end. And maybe it was because I was surrounded by students who were questioning all authority, including the university's investments in fossil fuels, that I decided to take another look into this clean ETF. And of course, it was mostly full of renewable energy companies, but also 2% of it did have fossil fuel holdings. And for me, this really lit a fire to dive deeper into discovering, well, where was my money sitting? And I came to the realization that I didn't really understand the use of my funds when I made investments. Like not even the industries that they were going to in a lot of cases, just investing in funds that held multiple different stocks. So what was the outcome of my investment? That's really what I wanted to know. And knowing that my money, even if it's just the money sitting in my savings account, has impact, well, that made me feel pretty powerful. And your investments should make you feel powerful because however small it might be, it's creating change while also helping you grow your wealth. So backing up, how do we go about this? How do we take the first step in investing with our values? When it comes to diversifying, allocating your investments, actually taking the action of investing in companies that are creating positive social environmental good, there's a few options. And the main thing you really want to avoid is putting all your eggs in one basket. Even if it is a really great investment, you want to make sure you're still diversifying across several investments. And this is where, Kristine can really use her expertise to help find you an asset mix that really works, or just to help consult with you about some basic principles that you should always keep in mind. But the point of this slide for me is I'm really going to try and break this down and make the socially responsible investing landscape simple by splitting it into two main groups. In the realm of socially responsible investing, there's investments that do less evil and investments that do good. So SRI, socially responsible investing, is the umbrella, And then there's kind of these many different types of investments, but two categories that most investments would fit in. So investments that do less evil. These are the types of investments that I was seeing when I first started investing. These investments focus on avoiding harm and minimizing negative impacts. They aim to exclude companies or industries with detrimental effects on people, the environment, or society. And these are the most common investments that you'll find when you invest with banks or investment apps, things like ESG, which is environmental social governance, sustainability funds, clean ETFs, like I experienced. And they generally avoid investing in negative industries like fossil fuels or tobacco. But there has been some negative criticism for the lack of transparency, and sometimes these labels are arbitrary. However, as you can see on the slide, I would still recommend that you allocate the majority of your portfolio, or if you want to have a completely socially responsible portfolio, then I would recommend you allocate the majority of your portfolio to these types of investments. Although they're far from perfect, they can be relatively safe, and they're the most common type of investment for retail investors in this space. And that means that you just have way more opportunities to diversify within this category. So the other option is investments that do more good. And these are investments that actively seek to generate positive social or environmental outcomes alongside financial returns. So they align with specific themes or impact areas. A couple characteristics are that they're purpose-driven, so they are intentionally directed towards creating positive change. There's measurable impact, so investors can actually assess the tangible impact of their capital. And some examples would include thematic investments, which just means an investment in a growing industry or a trend like renewable energy stocks. Another example could be community development funds. So investing in a local project like affordable housing or community centers. And these tend to be really hyper localized. So they're a bit harder to find because it might be like a one-off type of thing. And then there's impact investing. So that's where the measurable impact really comes into play. These investments support initiatives that generate a positive, measurable impact, while also addressing a social or environmental challenge like clean water or affordable housing. And impact investing can be one of the most powerful ways to create impact with your money. And the investor can clearly see how their contribution is creating positive impact. So when I discovered impact investing, I felt like, my investing world had transformed. I could understand the impact that my investments were having. And then better yet, I could actually invest in issues that I connected with or felt passionate about. But the problem at the time when I was exploring all these different options was that I couldn't actually make an impact investment. The few options that existed were either hyper local, like that community bond, or required a really large minimum investment amount in the tens or even hundreds of thousands of dollars. So meant for accredited investors, not newbies like myself. Now, impact investments are still very new to the Canadian retail market, and hopefully we will see a lot of growth in this sector. But for now, most impact investments take place in the private market or exempt market, which is considered higher risk. And because there's less of them on the market, it has the lowest fund allocation in my slide there, because there's less opportunity to diversify. So yeah, Kristine, you can jump in here.
Yeah. So there's a few things I wanted to just talk about in terms of how wealth management works, because it's something I wasn't aware of before I was in the industry. most wealth management is targeting these accredited investors. It is targeting high net wealth individuals, and there's a definition to that. So an accredited investor, to be accredited, you have to have $200,000 coming in per annum in salary or income, or have $1 million in investable assets, meaning you could write a check for $1 million in your portfolio to have someone manage that for you. And for most people in Canada, that is not where we are. And so a lot of the professional investment guidance, advice, everything else is really not targeted towards most Canadians. And all of these minimum, they call it assets under management. So the amount of the size of the check you have to write, it keeps going up. So, it was 300,000 when I started, then it moved to 500,000, and now it's encroaching on 1 million. So it can be very challenging to even access this good advice. However, for retail investors or regular folks, like I used to be a professional investor, but now I'm a retail investor because I don't have access to half of the systems that I use. It can be overwhelming, like Emily mentioned, but progress, not perfection. So one of the things I really like to say is, if you don't have any other option, let's say you're using Quest Wealth or Wealthsimple, they do have an SRI portfolio option there, and by selecting that, you're still voting with your money. And I was able to see that in the real world when I was at Scotiabank. So I was at Scotiabank in their capital markets, and we got better economics. We got a better deal for the bank to one of the clients we were lending to, because we had strong women's programming. So Scotiabank has the Scotiabank Women's Initiative. And because of that, we went from being in the 5th tier to being in the 2nd tier. And so that is a very real way in which some of these impacts are coming in real life, because the company that they were lending money to wanted to meet their ESG supplier diversity targets. And so when companies realize there's money up for grabs, they will figure out a way to access it. So in the smallest way, if it's of any interest, and it justified and negative comments on some of these things, I think that pressure is great. It's the only way we'll see improvement. It's just like greenwashing on things. We need to educate ourselves, and this is great that you're here. And also, by voting with your dollars, you're showing that you're interested in this, and that there's money to be made if companies are able to meet targets and make better choices. So it is a small but very real way to have positive impact, even if you don't have the time, the skills, or the energy to navigate further. That isn't to say that I don't encourage all of us to find ways to make more meaningful impact with our money, but it may not be available to us either emotionally, financially, or from a time perspective at any given point. So I don't know if that helps, but I felt that it was really neat to see it happening in the real world.
Yeah, and you know what? You're so right that any decision that you make within this space is like a vote, basically, and even a vote for ESG or SRI, all these acronyms we have. It's signaling that retail investors and people are looking for change, and we're looking to align our investments with our values. And so yeah, I use Wealthsimple and I love it. I think it's such an easy platform, and I invest in an SRI portfolio, and it's so easy. It's just a click of a button to switch from a more traditional form of investing to something with a sustainable label. And that's not to say it's perfect by any means, but it is to say that it's at the very least a signifier, but also clearly supporting.
And if I can put my wealth management hat back on, or my investor hat back on, it's not always the case. There are times when we lead and lag, but the theory was, or if you look at the research and the cases, the more ESG the company, the better the return, right? So the more diverse, the better the company operates, the better the return. And we've seen this, there's even all the way back in whaling times, we saw this on ships, and there's a really cool podcast episode, which I'll find and link in the notes. But so it's like, it's always been this way. And when I checked, Questwell's portfolios, the SRI portfolios were outperforming the regular portfolios more than the additional fee, because they are a little more expensive. Now I remember checking during COVID, and they were lagging. And I was like, oh, that's not what we expect to see happen. But generally in downturns, so the market goes up and down. Sometimes when it goes down, we see things that we don't see most of the time. So shout out to Quest Wealth, at least I'm sure Wealthsimple's seeing the same thing, but the SRI portfolios are actually outperforming, meaning you're actually doing better for yourself as well, than the standard portfolios. So it's kind of neat.
Yeah, it's a great insight. And when you think about it, it makes sense because ESG is measuring the risk against environmental factors, social factors, governance factors. So when something does happen, a traditional investment that doesn't consider these ESG factors would be more negatively impacted than an organization who's preparing for that kind of thing and already combating it in its own ways. But I'm going to talk a bit more about impact investing specifically. And when it comes to impact investing, I would definitely recommend dipping your toe in to get a feel for it. You don't need to by any means commit 10% right off the bat. It can be as little as 1% or whatever really you're comfortable with. And I'm going to talk about the way that you can do that. It's kind of where Goparity comes in. So what we do at Goparity is we help people invest in real Canadian businesses working on a project that creates real tangible impact. So with other green or ESG investments, you generally don't see the impact that your dollars are having. So here at Goparity, we take a really different approach by putting transparency first, so you can fully understand the organization that's using your money and how you're using it. So we focus on lowering the barriers for retail investors, so people like myself who are interested in investing with their values, interested in learning more about the space, and of course, interested in just dipping their toe in, aka committing however much you want. So our platform is really simple, but probably different to any investment you've ever made before. Every project on our website is a Canadian small business loan. So it is debt financing, and it allows you to see the annual return upfront. Our risk rating that we provide, which is correlated with return. So higher risk equals higher return. And all the other investment terms are just right there in front of you. And how it works is we use crowdfunding to pool small investments. So actually our minimum investment amount is just $10. And we don't charge any fees to invest with us. And $10 seems almost exaggerated with how low it is. But the point is so that you can dip your toe in and try it out before committing more. And another great feature of debt financing is that you know what your expected return will be. And that means that you can simulate your investment. So we actually do have a simulation feature on our website where you can map out what your repayment will look like and see how much you can make each year. And it is monthly repayments, so you're constantly getting part of your capital repaid back to your wallet. So yeah, very different than a traditional investment, and definitely something that takes a little more time and thought. than just, the click of a button and transitioning to that SRI portfolio. So it's steps to change your investments to being more socially or environmentally conscious. But it is an experience, definitely a learning experience where you get to see a little bit more into, well, how is impact measured? What should I be considering when I think about what my values are and what Canadian companies are doing to better the future of our planet and our communities. So every project on our platform has a complete project description, and it basically tells the story of the Canadian small business we're financing and what they're raising funds for. We also have a financial viability description and, of course, an impact description. And we measure the impact using qualitative and quantitative metrics. So we also share each project's contribution towards the United Nations SDGs, which I talked about at the beginning of this presentation. So to give you an example, right now we have a project that's about to close, but we're in the process of financing called Sober Island Oysters. This project supports a family-run oyster farm in Nova Scotia who is looking to purchase a more resilient form of oyster seed, or spat, and is better able to withstand coastal storms. And you can read all about their story and the incredible environmental benefits of oysters on our website. I know you might be thinking oysters seems kind of random. I know I've learned a lot about oysters, who they actually sequester carbon from the oceans, they filter water, they protect marine ecosystems. They're an extremely sustainable form of protein. So if you have any interest in learning about that, or maybe a unique industry that you had never really considered before, but you can see the environmental and social benefits of it, definitely check it out on our website. Like I said, Goparity is about learning together. It's about supporting businesses that are creating the future that we want to see. And just to answer some questions that I think might come up, right now, Sober Island Oysters is over 50% funded. And with only a few days left, we're working to reach our goal in the next week. If we don't reach our goal, we'll extend the project timeline by up to 30 days. And ultimately, if we don't reach our goal after that, we'll provide Sober Island with whatever we raise. They might not get as many oyster seeds as they were aiming for, but that's the situation with this particular project. I feel that I always get this question in webinars, so I thought I'd just address it today. But this process is actually different for every project depending on the conditions. The only thing is there is no situation where if you invest in a project and the total amount doesn't get raised, you won't see that money again. In the very worst case scenario, we'll just return the funds to your e-wallet if we are not able to raise it and the borrower has to seek funds from somewhere else. So yeah, I encourage you to check out Sober Island and learn a little bit about cool industry and a very cool family farm. So if you are interested in signing up for Goparity and investing with us, basically how you do it is you go to goparity.ca. We have a big orange sign up button, and you click that, answer a few questions about yourself. We do have some financial questions on there to make sure you're not investing more than 10% of your net financial assets. We do put a hard limit on that for folks. And then you load money into your Goparity e-wallet, so you can use e-transfer or connect a bank account, and then you make an investment. So it's pretty straightforward, and I'd be happy to answer questions if anyone does have them. And then, of course, after that step, you get to track your personal impact on your dashboard, see these little metrics that we have, and grow your impact as you make more investments. And that's all for me.
Thanks, Emily. I love that you restrict it to 10%. Traditionally, or at least portfolio management theory that I learned, it's around 5%. I know that if it's important, we often want to put more. But I'm glad that it's 10%. That's about what I would be comfortable with in this type of investment as well. Um, and just from a portfolio management perspective, that would be a speculative investment. I'm not entirely sure I would put these investments completely in that category, which is why I'm okay with this sort of 5 to 10% range. Um, Speculative investments are generally things that we just don't have enough history to study what is, or to predict and have an expected range. So when we make an investment, we have an expectation of what it's going to be worth in the future, and then we have a range. So it's probabilistic, and it's simulated, and I can pull up an example of that. But when you go into speculative investments, we just don't have the history, or it's too hard to gather that information and things like that. So one of the things I like to tell people is, rather than speculate in Bitcoin or something that would be a speculative investment. There's nothing wrong essentially with any of the cryptocurrencies. It's just that we haven't figured out what underlies the value. So it's hard to, like, we don't know whether it's number of people using it. We haven't found a metric that we can predict what the value is going to be, and therefore we put in the speculative category. I always used to say that it's a really good idea to invest in art, because art is speculative, but we know that if you really love an artwork, and it emotes something in you, it'll actually lower your base level of anxiety. So you'll get intrinsic value from the art, you'll beautify your space, and you have something you can pass along to future generations. So I always like that one. But now that I know about this, it's a really great way to use that sort of bucket of capital if that's something that fills you up, and putting it to work in a Goparity. I really like how you've made it easy. Um, can you tell us a little bit more about, I know you talked about how you got involved in it, but can you tell us a little bit more about, like, actually founding Goparity and co-funding it, co-founding it? Sorry.
Yeah, for
Um,
sure. For sure. So in my undergrad, when I was realizing that there was this huge lack of impact investment opportunities for folks like myself, I started kind of using the resources around me. So, getting together with some of my peers who are also passionate about this issue, talking to professors, and as well as getting involved with some like external programs. Student Energy was one that we worked with right at the beginning to first get our research a bit better supported on this particular issue, and then eventually to help us start a business that was going to solve this big problem and this gap that we had found. And being in business school, we also had like just a ton of support from professors and encouragement to go for it. Our business school, I went to Ivy at Western, and it's very, very entrepreneurial. There was even a program that's like or I guess it's a 4-month program that
is it a new venture project?
it's a new venture project. So did that. And during my new venture project, COVID happened. And so suddenly there was no more in-person classes, and everything went online.
Yeah.
And that actually helped us a lot, because we started looking outside of our immediate community where we already knew there wasn't anything like what we were trying to create, and looking outside of Canada to other markets.
Mm.
And we connected with people in sub-Saharan Africa, in Europe, and it was like just from doing cold calls pretty much and reaching out. And we found a few European companies that were using the model that we are now ultimately using in Canada, and just asked them our questions. And people in the social and environmental space are, I find, really, really willing to help others in this space because we have this common goal, this common mission. So connecting with those organizations was awesome. And one of those organizations is Goparity Europe. So Goparity was an idea born in Lisbon, Portugal, 8 years ago now. And we had a call with them. And after our first call, they were like, let me bring on the founders to talk to you. And so just having these really deep and meaningful conversations with people at the other side of the world through a Zoom chat
Yeah.
was like so unreal. And we found that we actually had a really aligned vision. And they said, well, how can we help you solve your problem and bring this to Canada? And so we decided to partner, use their resources, adapt their platform for the Canadian environment. And it was many years before we actually launched to the public because we were working with Canadian securities regulators, making sure that we were developing a platform that was safe for investors in terms of, putting the right limits on investment amounts, like that 10% that we
Yeah.
talked about, making sure that we have all the right information, anti-money laundering policies, and all of that kind of stuff had to be considered and incorporated. And then the actual type of security that we are selling has to be, of course, approved by securities regulators. So it was a few years working with lawyers and regulators in this space, as well as having like this knowledge and expertise from Europeans who were doing it already, that allowed us, who were recent grads, to launch this and spearhead this in the Canadian environment, something that's totally new, and totally new type of investment for most retail investors.
Yeah, I think it's amazing. One of the things I lamented, because I used to manage money for in a mutual fund, and we had a specific type of style of investing. And we weren't able to take most of the people I knew's money because they had to be accredited. But what that also meant is that as a retail investor, as like everyday Canadian, you don't have access to a lot of the, you know, interestingly, most of the robo advisors outperform all of these fancy funds anyways. However, if you want to invest in something like this, there wasn't really a way to do it. And you were sort of really stuck with the bank offerings or the ETFs and the funds available. So I really love the woman that I spoke to. She had invested in a community and commercial space downtown Toronto. And I just thought you could see her sense of pride in being an investor, her sense of pride in being part of this community hub is how they really, and I've been to that space. I love it. I've often thought how unique it is and how wonderful it is. And then later I met an investor who was a client who, had made this investment, and it was through Goparity. And she was the one who said, you should really check out this company. They're doing some really cool things. And then I think I think it's a really neat way of enabling people to really put their money where their heart is. And it is risky, but anytime we invest in anything, it is risky. So I think it's wonderful. Thank you. I did mention that I would find a picture of what I mean by a range of expectations. So as someone, when you create a fund, you run what's called a Monte Carlo simulation, and you look at historicals and our probabilities, and you get a graph kind of like this, where the darker color, I know it's hard to see, but the darker color is the more expected path, but we recognize that things may not go to plan. And of course, no one can see the future. That would be for the 90% of your portfolio. And then in the 10%, you can do something that maybe matches what you want to see in the world, and really invest and build the future that we want to live in, or that you want to live in. So I love that you've made that available to Canadians. Does anyone have any questions? Please put them in the chat. Oh,
Saw that
yes.
Tanya has a question. So I can answer this. So
Mhm.
no, the oyster farm is not Indigenous owned or led. We have had projects in the past. Actually, the one that we did previous to the oyster farm was providing renewable energy solutions for remote Indigenous communities here in BC. So that was a very Indigenous focused project. Um, and we'll definitely be incorporating more Indigenous owned, led, or impacted projects into the future. However, this one in particular is not, and you will be able to find all of the information on the community impact in the project description as well. So yeah, this one is not an Indigenous owned or led project. It's Nova Scotian family who, yeah, again, all the info is in the project description, but definitely not to say that we won't have another Indigenous project in the future. Thanks for the question, Tanya.
And then I
Uh,
see a question from Karen as well. And then Karen, I just wanted to clarify, so you say there's a conversation around impact investing and the trade-off between impact and financial returns. And we sort of touched on it earlier. Generally speaking, the theory says that socially responsible companies, or at least diverse companies, people who have diverse individuals will have better uh, performance in their firms, largely probably due to the ability to get ideas from more places because they're more open. I'm not saying they're perfect, but they're more open than their counterparts. Curious, Emily, if you have any thoughts, and then I can share my screen and show it in real time on QuestWealth because they show their returns.
yeah, I have this graph I sometimes show that unfortunately I didn't include in my slideshow, but it kind of showed how there is this spectrum of investment between like traditional investing and philanthropy and what falls in the middle of those. And I think when it comes to those investments that do less bad, um, that is still a return first option. You know, it's looking at prioritizing the financial return while also making these social, environmental, and governance considerations. And now we're seeing that those are actually performing better. I think because it's lowering the risk of those factors that are pretty important and evident in our everyday world. When it comes to impact investing, I would say it really depends. A lot of impact investments, the thing about them is they're impact first. So you're not making the investment for the purpose of trying to make a lot of money and say like, oh, this is gonna get me the best return. And that isn't typically or shouldn't be your goal when you're making an impact investment. The goal really is um, the impact, but not to say that you can't do both and make a return and have an impact. I think with the investments we provide at Goparity, uh, the trade-off is not necessarily with the return, but more likely with the risk factor. So it is a higher risk investment because it's investing in the private market, which means like a privately owned business, not like something publicly traded. And private market investments are just classified as higher risk.
Mhm.
So
They talk
although it might be a similar return to what you're seeing on the stock market, it's a higher risk investment. So that's more where I'd say the trade-off might happen.
Yeah, so that's a really great point. Private investments are more illiquid. Liquid meaning how quickly you can trade. So even some companies have a very illiquid trading opportunity because it's hard to find partners. So one of the reasons why the banks are given some of the benefits they receive is because on the trading floor, you have to be a market maker, meaning at any given time, you had to be able to give a price that you'd purchase a security at and a price you'd be willing to sell a security for. Um, and that can be really scary. You know, if the price of something is falling, you have to give an offer to purchase. And they call it catching a falling knife. And so that has liquidity. There is a willing buyer at all times. The bank will always, they might not give you a great price, but they will always give you a price. Whereas in a private market, there's maybe not necessarily someone to sell it to. So if you need your money for some unknown reason, it may be difficult to get the money out of that investment or get it at parity. And then the other thing is we talk about risk versus reward. So the more risk you take, the more return you want to get, generally speaking. And so what Emily was saying is that maybe the risk is higher, but the reward is more commensurate with a more conservative investment because it just doesn't have, it's mainly, I think, due to liquidity risk, but also maybe due to some, it sounds like you go through all the same regulatory hurdles. So it doesn't sound like that's the issue. And then on the sort of just on the robo investment side of things, I wanted to share I opened QuestWealth is I like using them because they put their stuff very easily seen. So this is a balanced portfolio, 60% in stocks, 40% in bonds or loans. So this is company ownership. This is a loan. And you can see that here the performance, we always want to look at 5-year compound performance, it's 5.64. And here in the socially responsible one, 5.83. So it's a little more. These do cost a little bit more as well, but you're earning more than the cost. So it costs a little bit more, but you're earning the cost and then even more. And then the further you go, so this is risk here. So these are riskier on this end, less risky on this end, but at the higher end, aggressive here, you can see it's 8.82. And then if we go to the regular one, the non-SRI one, you can see it's 8.3. These kind of come and go. And as I said, sometimes I check them and they are inverted. So SRI is not beating or outperforming the regular one. But most of the times I've checked in, it's been the case that they are paying for themselves and then some. So I don't know if that helps answer the question, but that's one of the things. And I put in the chat, like B Corp companies are not just beholden to shareholders. So that's a really interesting structure as well. Whereas companies on the stock market that aren't B Corp, they are only beholden to shareholders. Their job is to get the best price for shareholders. That is what they're built for. And so it's great as an investor, but it's maybe not great for the world that we live in. Awesome, Karen. I don't know. Do you know much about B Corp? I'm just starting to learn more about it. I saw Hi Mama was an app that was probably one of the first companies I heard give a presentation on B Corp certification, but it was I had little kids then and they're not so little anymore. So it's probably 5, 6 years ago and I'd have to dust some rust off my ears.
Yeah, our partners in Europe are B Corp certified. We are not yet, but we'd like to work on it. Basically, it's a benefit corporation, so a company that balances purpose with profit. And there's actually a surprising number of B Corps out there. I know the first one I heard was Ben and Jerry's, which was very surprising to me because I had no idea. But it's a really nice like label to look for because you know that it's not just a sign of sustainability, but also a sign that they're working on, you know, everything in their business is making decisions that are balanced with the purpose that that organization has, the social or environmental purpose, which is really nice. And B Corps also do a lot of it's quite a bit of work to become a B Corp, not a
Yes,
ton, but that's why we haven't done it yet. Is
rigorous. It is
for
rigorous.
for a startup, it's quite time consuming and you need to have somebody on your team who's kind of dedicated to meeting all of the standards that you have to upkeep. So there's like an initial application, and then on a continued basis, I think it's annually, you have to make sure that you're answering these questions in meeting the standards that are set out by the B Corp organization, which for consumers is awesome because it's a really good sign that
Yeah.
a company is putting forth a pretty significant effort to do good.
And if I remember, I think it's across like a spectrum, right? There's environmental, there's like, and and then they ask you to put out a roadmap for each one as well. I can't, I thought it was expensive when we looked at it, which was a hurdle. It is a hurdle for a startup, but it's something that I really would love to be able to do because it aligns so much with my ethos. Um, and so that's really neat.
There,
Well, we are, sorry, go,
there's,
go.
I was gonna say there's a social one as well. Like it doesn't have to be sustainability or environment focused. It's whatever your purpose is. So
Mhm.
it's really nice to have those social initiatives there as well.
I think they encourage it across the board though, right? Like, or at least the questions are pretty all encompassing and you have to meet a certain threshold of whatever they in order you have to be above a certain threshold across all the different pillars. So I thought
Yeah,
they
they like
encourage you to
for you.
yeah.
So you answer these questions and then you get a score and you have to be above a certain score. And I
Yeah.
know it is hard for some companies, especially startups, to be above that score because there's a lot of work to make sure that you're meeting those standards.
And you have to prove it too, right? So it's yeah, for the consumer, it's a really great way to what I want to get across with the rigorousness of it is one, it's hard to do as a startup, but also two, as a consumer, you can trust that designation probably more than some, like I would say it's more rigorous than an SRI label, for instance. I think it's in the more, I'd put it in the one of the more rigorous categories. I apologize for taking my sweater off. It's 20 something degrees here. It's very hot in my office. And we're also coming to time. So if you have any questions, I'm going to put Emily's and Goparity's information in the chat one more time. Feel free to reach out to her or them. And then also, Untangle Money is around, and feel free to reach. All roads eventually lead to me. I try to answer emails and get back to people on Fridays. We are a little swamped at the moment, so which is good. But we love having amazing content like Emily join us and Goparity and learning about all the different options that are out there because we know it's important to our customers and I think generally for the world and it aligns with our purpose as well. So Emily, thank you for sharing your knowledge and your purpose with us.